Welcome back to Confident Real Estate. I'm your host, JC. We've all heard what the YouTube experts predict for the coming housing market year of 2021 and what their predictions are for real estate in general in 2021. At the end of 2020, it seems like every real estate channel on YouTube had a video predicting what we could expect for the coming year. And they all generally had the same optimistic outlook. But I figured now that we're halfway through the first month of 2021, maybe we should actually check in with the industry experts and get their thoughts on what they actually expect to occur with the housing market and real estate in general during the next 11 and a half months. Seems like a good idea to me. So in this video, we're going to look at what some of the top executives and economists at the country's largest residential brokerages, mortgage companies, industry associations, and Ivy League schools have to say about their predictions for 2021. If you've ever watched a Confident Real Estate video before, you know this is the point in the video where I ask you to smash that like button to help feed the YouTube algorithm and help our channel to grow. And if you've not yet joined us, consider hitting subscribe and joining our constantly growing Confident Real Estate family. We want to have you. All right, now that I got that out of the way, let's first start with what some of the largest online listing agencies in the country think 2021 is going to present for all of us involved in real estate. Jeff Zucker, a senior economist at Zillow, one of the largest online listing agencies around, had gone on record at the end of 2021 to say that he expected the housing market to continue its bull run through the summer and autumn well into 2021. He saw home value appreciation approaching 9 or even 10% by July before cooling somewhat down towards 7% appreciation. This rapid price growth will be driven by the same factors that took the steering wheel in 2020: strong demographics, low mortgage rates, and an inadequate supply. The millennial generation, he predicted, is moving into their mid-30s, bringing a wave of demand from renters looking to buy their first homes. Mortgage rates may inch back up around 3%, but even at that level, they will be making home purchases more attractive all along the price range. And although builders are finally firing on all cylinders, delivering new homes to the market, it will take them a long time to make up for the home building deficit that accumulated from 2008 to 2019. The clearest barometer we have that reflects all of these dimensions of the housing market is active inventory, which is down more than 1/3. That's 33% year over year. That suggests continued fast price appreciation ahead and fierce competition between buyers. It's just a general case of demand and a lack of overall supply. Similarly, Daryl Fairweather, the chief economist of Redfin, another large online listing service, said that although the U.S. may be able to vaccinate most of its citizens by the end of 2021, many countries are going to struggle to distribute vaccines. Thus, the global economic recovery could take much longer, which would make U.S. mortgage-backed securities very attractive to international investors, and that would keep mortgage rates low. Even as the pandemic hopefully nears its end, Americans will continue to buy homes that fit their new lifestyle. As a result, 2021 will see more home sales than any year since 2006, he predicted. Annual sales growth will increase from 5% in 2020 to over 10% in 2021, and rising prices for existing homes will increasingly drive more buyers to consider a new one. And because home buyers are now more eager to buy in suburban and rural areas where land is cheaper than in the cities, there will be more areas where homes can be built profitably. By the end of the year, the home ownership rate will rise above 69%. For the first time since 2005. As a whole, I think we can generally expect that companies who make their profits on home sales will generally be optimistic and always see the glass as half full, although, as we just saw, maybe for potentially slightly different reasons. They all agree that buyer demand is going to be high while actual product and volume availability will be lower, at least through the first half of 2021, until new construction can catch up and provide more options on the market and more inventory for buyers to choose from. But what do industry association leaders think? Do they have a different perspective? Are they a little bit more realistic or pessimistic? Let's find out. Robert Dietz, the Senior Vice President and Chief Economist of the National Association of Home Builders, went on record to say that with home builder confidence near record highs, we expect continued gains for single-family construction, albeit at a lower growth rate than in 2019, before the pandemic pretty much shut everything down in 2020. Some slowing of new home sales growth will occur due to the fact that a growing share of sales has come from homes that have not yet even started construction. They were pre-construction purchases. Nonetheless, buyer traffic will remain strong given favorable demographics, a shifting geography of housing demand to lower density markets like suburban and rural areas, and historically low interest rates. But supply side headwinds are going to persist. Residential construction continues to face limiting factors, including higher costs and longer delivery times for building materials, an ongoing labor skill shortage, and concerns over regulatory cost burdens. For apartment construction, we will see weaknesses for multifamily rental development, particularly in higher density, more urban markets, while remodeling demand should remain strong and expand further. In layman's terms, he's saying that while they do expect there to be more construction in 2021 of new homes than there was in 2020 when the pandemic first hit us and shut everything down, they do think that the fact that it is more costly to get materials for building right now and takes a longer time to deliver new construction homes because of regulatory shutdowns and a lack of skilled labor that's in the areas where people seem to be shifting and buying in less densely populated markets like suburban and rural areas, that it's going to take longer to deliver these new homes. And that could be a problem that slows new construction home sale growth. And again, he did make a very valid point that multifamily housing is going to see a construction slowdown because with rates so low, people are considering buying more than renting than they have in, pre-pandemic years. So something to keep an eye out for and think about when you go out to buy an investment property. David Howard, the National Rental Home Council Executive Director, went on record to say that two things that he plans to watch are supply and affordability. Will there be enough homes for those that need them, and at what price? COVID-19 served to accelerate a move towards single-family home living that had started to take shape over the past few years. Much of this move is being led by millennials, who are transitioning squarely into prime household formation years. However, that generation is also the least wealthy at a time when the cost of home ownership continues to climb, again due to a lack of inventory. We believe these demographic factors bode well in the coming years for the rental housing market, particularly single-family rental homes. Millennials' demands for housing is not going to diminish, but it may take a little longer to make home ownership a reality. And that's a really interesting perspective on things because millennials really do want to own their own home and have their own place to live that they call their own, but they're not wealthy. They're younger. They don't have the savings that the older generations have. And right now, with it being a buyer's market, a seller's market, home prices are rising, and it is very hard for people who don't have a lot of money saved up or a house to sell that they can then take that money and profit and put into the next house. It's very hard for those people to go out and buy a home right now. There's just not enough inventory to make prices competitive. So millennials may still need to rent homes for many years to come, especially the younger portion of the millennial generation. But they don't want to live in apartment complexes for the most part. That's what the studies have shown. They want single family or 2-3 family homes. So for all of us real estate investors out there, that's something to keep in mind and think about as you go out and look at properties. So that was a little more dose of realism, but perhaps to get the real facts, we need to hear from some of the largest data and analytics companies in the real estate industry. That takes us to Todd Teta, Chief Product Officer at ATTOM Data Solutions. He said that we're exiting 2020 with a number of dynamics that will more than likely keep this crazy housing market going. There is incredibly low inventory with less than 500,000 homes for sale, mortgage rates are at 50-year lows, and there's no sign yet of distressed sellers from the recession coming out. These supply and demand factors will push prices even higher in the first half of the year. Inventory and pricing should ease a bit in the second half of the year, and larger economic headwinds could start showing up. Until then, buyers should be cautious and sellers should be jubilant. Likewise, Selma Hepp, CoreLogic Deputy Chief Economist, stated that while 2020 did not surprise with its fair share of surprises, 2021 could still have more surprises in store for us. Still, expectations for the housing market remain generally positive. First, interest rates, which have motivated many buyers in 2020, are expected to remain low and will help ameliorate some of the affordability concerns resulting from rapid home price appreciation that we saw in 2020. In other words, low mortgage rates continue to provide greater purchasing power, especially for first-time home buyers, even if prices continue to rise. Second, first-time home buyers will remain a strong force in the market as the largest cohorts of millennials are turning 30, critical household formation years. But also, the oldest millennials are increasingly contributing to the trade-up market. As a result, 2021 home sales activity is expected to remain strong and outpace 2020 levels. Third, inventory levels are likely to see some improvement, partially from sellers who have been on the sidelines, partially from distressed homeowners, and partially from more new construction. But the housing market will continue to struggle with an imbalance between supply and demand, which will lead to sustained competition among buyers and further home price appreciation, albeit at a slower pace than seen in 2020. Seems like they seem to think the same thing that everybody else does. The first half of 2020 is going to see price appreciation, while the second half, things are going to calm down. But some very interesting insights about the millennial generation. As an added bonus, Susan Wachter, the Sussman Professor of Real Estate and Finance at the prestigious Wharton School of Business at the University of Pennsylvania, gave us her thoughts on 2021 and real estate and the housing market. She said the residential real estate market will prosper in 2021, even as COVID-19 continues to ravage the economy, delaying the full recovery to 2022. Low interest rates will prevail, resulting in lower mortgage costs for home buyers who can qualify. We will see slower price rises in the mid-single-digit range as affordability gaps cut demand. Although 2021 will not see the spike in demand for residential property that characterized 2020, she did expect to see a continuation in 2021 of trend shifts catalyzed by the pandemic. While 2021 will see home builders responding to higher prices, supply and inventory will still be limited. Fed policy will enable lower mortgage rates for highly creditworthy borrowers, while inflation may begin to emerge. Finally, the millennial generation will continue to be the defining demographic group in the housing market for years to come. Hopefully, hearing what a lot of these industry executives and top experts and economists had to say about their thoughts on the housing market and real estate in the United States for 2021 will give you a little bit more to think about as you analyze the options for your investments in the coming year. I think it's very interesting that everybody agrees the housing prices are going to continue to rise for the first half of the year and then start to come down and cool at the end of the year as more new construction comes online and millennials really start to become the trend shift for the coming years for renters and for home buyers. So if you're flipping, if you're buying for long-term investment rental potential, there's a lot of pros to think about that are coming out of what's going on through 2020 into 2021. But you got to be aware of what's happening and what the actual experts in the industry are saying so that you can better be informed about the decisions you make for your investment portfolio. As always, I appreciate you watching this video all the way to the end. If you haven't already done it, please hit that like button and feed the YouTube algorithm. And again, if you haven't subscribed yet, please consider joining our Confident Real Estate family. Again, I appreciate it. Until next time.